And welcome back to Bitcoin Advisors channel. My name is Chris, bringing it to you here from Westlake Village, California. Sorry I missed you guys yesterday. I actually have surgery tomorrow. I'm getting a rotator cuff repaired, so I will hopefully not be out more than a day. But as you can see, a lot can happen just in a day's time here. And what I want to start it off with is the dollar here. And this is the asset that is ruling the markets at the moment. And here's what I would start off saying. Following up on what I was speaking about the day before was that if we got a tick below here, very likely the dollar to come down to this 9 exponential and put in a bit of a bounce. So as the dollar had some, declines over the past 2 days, we have seen Bitcoin put in a bit of a rally. So, and traditional markets as well. And then as the dollar popped back up today, right, we're seeing markets kind of sell back off. So I guess it's important to take a look at the weekly time frame for the dollar and just give us an idea of where the dollar what the potential target for a dollar move is. And I would say something like this, because we have 3 drives of bearish divergence here. RSI is making lower highs and price is making higher highs, but we would need to confirm this on a weekly closure in the next 2 days and 7 hours with any kind of a closure below here. Some would already say it is done. We also have the momentum indicator crossing down, indicating momentum is to the downside. And really with these 2 drives of bearish divergence, I am looking for a shot down to the 21, maybe somewhere in this region. And if things get really crazy, we could be looking at a move all the way down, maybe 104, 105-ish, somewhere in that range. And what does that likely line up for, traditional markets and Bitcoin to get a bit of a bounce? And what a day to make a video about the stock market, given all the bearish biases, and then it rallies right in our face. But that's the whole idea here is, there are going to be bear market rallies, and, the pain is not over. The Fed chairman from San Francisco was just on the TV this morning and said they are committed to restoring price stability. Not only that, yesterday we had the JOLTS numbers come out. There was less job openings, which that might sound like a bad thing for the economy. But Powell was saying, hey, we want to see a rebalancing of job openings to job quits. And right now, I think there's still 2 job openings for every person who quits. So with less job openings, right, and more people quitting, some of the same, basically they're kind of accomplishing what they set out to do. Their federal mandate is to, keep price stability and control the job market. So again, all these problems don't get solved overnight in 1 second. But jumping back onto Bitcoin, what we were following up over the past couple of days was this 4-hour time frame, and just remarking it off, saying, hey, CMEs is kind of the chart to rule them all. Although it seems like spot price tends to lead the market, we were saying any kind of a 4-hour closure above 19,680 very likely got us a move to the top side of the range at 20,200. That target got hit and sold off a bit. And that's very likely going to get us the next big downside move. And I would say this, as long as Bitcoin is holding up above 10,680 on a 4-hour time frame, it looks like, more upside maybe in the cards. At the moment, the Stokes are crossed down. Volatility is declining, and they will cross back up above 20,400. And so here's what I would say. very, very likely if we get a closure above 20,500, and we did kind of put out these targets the other day. We said that very likely this a break of this structure right here would very, very likely get us a move. Let's see. Around 21,500. So any kind of a 4-hour closure above 20,520 on CMEs very likely gets us the next move up to 21,530. And I do believe we'll probably run into some selling pressure in that area. What else did I want to point out? And again, kind of invalidation right now. So just putting the fib, taking the fib back off. Any kind of a 4-hour closure back below this pivot, the breakout level, I'm looking for a move back to the bottom side of the range at $19,000. And let's see what could possibly happen based on the higher term time frames. We are kind of in limbo land, and you can see as the dollar just put in a bit of a rally, selling off that green 55, putting in a bit of another, well, it's not a confirmed lower high yet. Do we have a lower high on the hourly? Looks like, again, once again, a tick below here very likely gets us a move down to that 9 exponential. And that may be the higher low. Where could we expect a higher low to come in now? So we're testing the breakout level just perfectly here and getting rejected. So if we use our good old fib tool here, I would expect a higher low to come in around 110 to, 110.90 to 110.77, even on an hourly time frame. If we do get any kind of a closure below that 110.75, I would be looking for pretty much another leg down, and probably that bottom side target to get hit around this level right here. That's what I would say for the dollar, and that would probably line up with Bitcoin making the leg all the way up to making a leg all the way up and away to that 21,500 region. Now let's see how that will play into the higher term time frames on Bitcoin. So getting a bit of a rejection off the 9 on the first pass. So yeah, I do think we probably swoop down one more time here and test this trend line out. We didn't get a full test, close enough is close enough. But I do think there's a good possibility for one more swing down if the dollar can hold itself up here in the short term. Although, again, what has me a little bit more on the side of a bounce is the dollar. Again, we're macro bullish on the dollar. Looks like a short-term high has been put in. But when you have a monthly closure and a macro breakout like this, and you take out some highs like that, I'm just going to take these lines off and put in a trend line here. So here's a trend line coming back. All the way back from over there. So as we broke that trend line, it does appear that that should be a bit of a support level going forward on the monthly time frame. And as long as we don't get a tick below this guy at 107.55, then the bias is going to be continued traction to the upside. And who knows, we could come all the way down and, test the breakout level, but I don't think that's in the cards at the moment. And that would obviously line up with Bitcoin and stocks having a greater bounce. All right, back on to Bitcoin on the daily time frame. What did I want to point out? As we've been talking about the stochastic volatility move versus volatility. So volatility is pinned on the floor here right now. And something to note, we've been talking about the 2-day and the daily. And here is, here's what could happen. What often does happen is you get the initial increase. Remember, we declare a liftoff or this move in motion as Bitcoin, as the BBWP gets above 20 percentile. And currently we're still pinned on the floor. So what does sometimes happen is that you get a bit of a kind of fake out move. So it pops up here and then it comes back down, and then you get the real move, the explosive volatility there. But as for the moment, as long as we have daily Stokes to the upside, that should be the direction of the bounce, and the average bounce is going to be about 24%. 24% in either direction. And just to give us a guide on where 24% would land us here. Let's get the ruler out. So from expansion, which we started to expand off the lows right here. Yeah, I would say let's zoom in here a little bit more. So we expanded off the lows right here on this blue bar. You can see it just barely expanding off the lows. And you can see this one more immediately shot up. Actually, let's look at the past couple of times. So the daily has less of these kind of fake out moves. But again, the real move starts above the 20 percentile. And that's when we can say, hey, confirmation is in for this particular signal. But let's say we take it from the low here, 25% up would put Bitcoin at 24,000. Coming back into this high right here, and we would still have a lot of bearish, many drives of bearish divergence coming back from this point right here. And if this does confirm as a local high, that'll be another drive of bearish divergence coming back from this pivot right here at 32,000. There is a gap up here as well. And what's the significance of that? Well, a gap fill, or at least a test of this trend line at 25,000, is going to look, based off the 2-day time frame, with which the average bounce on the 2-day time frame when we get expansions is about 39%. As we can see, 2-day volatility has not began to expand. We want to see it get above the 20 percentile to say, okay, that volatile move is going. And yeah, if you wait for that expansion, you're not going to get the whole move. If you buy the cross up, do we have 2 crosses up? Well, this one will close today in 1 day and 5 hours. So tomorrow's Thursday, surgery day, and then Friday, as long as we are above 18,791, the bias will remain to the upside for the 2-day time frame. And so where is 39% from expansion or off the lows? As we crossed up, let's just see where that would get us. 39%, yeah, that gets us up to this area right here. somewhere in that region. And that would very likely bleed on into the 5-day time frame, which has now been crossed up. And that won't have another closure until, it looks like 6 days and 5 hours. So probably, Tuesday next week, something like that. And as long as we are below this 9 exponential, I mean, look, we're just consolidating in a range on the 5-day time frame. And again, very, very likely what I'm waiting for on the next major downside move in regards to spot price action is a daily closure below that 17,657. As you can see, we are still just making lower highs. We got the death cross looming right there. And just so you know, a perfect death cross, price action gets sucked up into the cross and then spit back out. And that is where you typically get your best sells on a death cross. These things are very powerful. The last time we had a golden cross, for example, on the 5-day time frame, let's use BLX. Where is the BLX chart? Geez, the last time we had a golden cross was right here. So we haven't had a death cross, which is pretty much confirmed here. I'd say one more closure as long as, and look, it's a very negative slope there crossing. So even on the next 5-day, if price action got sucked all the way back up to 30,000 bucks, it would not uncross. So that does play into the bearish bias there. And a weekly, we've never in Bitcoin's history had a weekly death cross. And that is nowhere in the cards yet. Looming, if the dollar does do, stays macro bullish and we see a breakout. And as I'd mentioned, I've got a target on the dollar all the way up at about 150 based off of this massive descending triangle. Well, that could bode with a future death cross for Bitcoin and some of those lower term targets. So just wrapping it up with the 5-day. Volatility is going to be expanding from extreme lows, but we are not above the 20% out. Oh, we got above it just barely. And that's, typically what you see before the big moves is a bit of a fake out, right? So you get fake out and then really when we really start expanding, right? And this thing gets a positive slope. So you want to see the exponential average get a positive slope. Right now, as you can see, the moving average, the white line, is still got a negative slope. So we are just above it. And as I imagine, this is going to turn around here probably in the next 2 weeks. We're going to see that expansion. The moving average is going to, move over, as you can see here, very similarly on the 5-day. We came up, we got above the moving average. Okay, came back down. That was the fake out. And, just know that's happening over, from March of 22 to April of 22. And let's remind ourselves what kind of a move that was from March of 22. That was a downside move. So March to April. Oh, so we got a bit of upside. And then, so that was the fake out. And then as we really started to get above the exponential and get positive there, right here. That was 22. That was 21. So a very different read as volatility maxed out. Okay, that told you the move was ending. Very similarly here as volatility maxed out. And forgive me if the screen is hard to read here. But as volatility maxed out, okay, that told us the downside move was over. So we regain the exponential. We come back down. Do we get something similar here where we regain the exponential, come back down, and then pop it back up? That that could be in the cards here. And so market putting in a bit of a rebound as I'm putting on this video. On the 4-hour time frame, we're getting that initial rejection, and vice versa here. The downside move was completed as volatility maxed out, right? So downside move on Dixie gets up near the 90 percentile. And then what do you expect? Sideways or a mean reversion bounce, which is what we got. So as we lost the exponential, price went back up. And what I would be looking for is a volatility reset. So volatility to come back down. And then we'll get the next explosive move on the dollar. So, you know, does the dollar do something like this for the next couple of days? You know, maybe, actually, I'll just use this fib here to see where the potential higher low could be. Again, right around 110 or, yeah, 111, somewhere in that zone right there would look good for a nice higher low. But right now, the 4-hour time frame, the trend is down. You got lower highs and lower lows, so perhaps we do get some of those lower targets that we talked about, and that does line up with Bitcoin taking a rise all the way up to 25,000. Again, I'm going to be macro bearish as long as we are in a weekly downtrend on Bitcoin, and as soon as we put in a higher high and a higher low, then I'd be ready to, you know, change my bias. I think that's it for today, guys. I hope you have a blessed and highly favored day. I will hopefully be back to you guys on Friday, and we'll follow up from there. All right, take care.